In Chapter 18, we are talking about process costing, and our learning objectives are describe the flow of cost through a process costing system, calculate equivalent units of production for direct materials and conversion cost, prepare a production cost report using the weighted average method, prepare journal entries for a process costing system, use a production cost report to make decisions, prepare a production cost report using the first in, first out method. First, we're going to describe the flow of cost through a process costing system. So, does anyone remember, we kind of talked about this a little bit, but what a process is?
Like a factory type of thing.
Mm-hmm. Where we just have like step by step.
Mm-hmm.
And we talked about this a little bit last week in last class, 2 weeks ago.
Parts and fragments to all put together to make one product. And like when we were talking about iPads, we're talking about like the
Producing those tablets.
Yeah.
Yep.
Like you have batteries, and then you have the screen, and you have the whatever else goes into the system of the iPad, just to make that tablet.
Mm-hmm. And we have a process that we flow through to put it together and get it to completion. So so we have two different types of costing systems, job order costing systems and process costing systems. And we talked a little bit about job order. Job order tracks it based on the job, and we had a diagram where we looked at, and we had, I think, job 37, 38, something like that. And the jobs were at different stages in the process. So we had one job that had went all the way through finished goods, cost of, for sale, cost of goods sold. And then we had another job that, was about midway in the process. And then we had another job that had, just been started. So with a job order costing system, it tracks items based on the job. So it allocates cost by job, and it's used by companies that manufacture a unique product or provide specialized services. I think we talked about some examples before, but can anyone think of an example of a company that provides a unique product or specialized services? Catching you guys off guard.
Like, maybe like a carpet cleaning company. Like they have to go by square footage.
A carpet cleaning company would be a good one to track by jobs, or even like a house cleaning company as well, because they probably do track their cost. They probably do allocate their cost per job, and the job would more than likely be the customer. So they might have it in their system as Joe, or they could have it in their system as their address, like 123 Main Street. But that would more than likely be the job, and then they would track the cost based on the square footage in that example. I'm sorry?
Same thing like in a bakery too.
So if it's a bakery that's baking like special items for like events, they would probably track it based on the event. So if they have like they're catering for GMC's graduation, they might have a whole order for that. But like their everyday bakery items that they probably have on sale for regular customers would be different. So anything unique or specialized. So just keep in mind, unique or specialized is normally tracked based on job order costing. Construction. So if there's like a company that does home remodeling or home repairs, restoration, stuff like that, they normally track based on the job as well. and that's more of a specialized service. In a process costing system, they allocate cost by process. They are used by companies manufacturing identical units. So our tablet example would be using a process costing system because we're more than likely producing a large amount of tablets. They're all the same product, and more than likely they're all identical. They all use the same types of parts to put together and come up with an identical product at the end. A process is one of the steps in a manufacturing production. So a lot of times when we have manufacturing plants and stuff like that, they are using, there's a process that they're following. Kind of like think of like an assembly line or something, where you're literally doing the same thing until the product is completed, putting a car together. And in this example, we are looking at the differences or similarities between the two. So just to kind of help us better understand what a job order costing system is or a process costing system, the company type that normally uses a job order costing system is a manufacturer that manufactures unique products or provides specialized services, and they accumulate their costs based on the job. Their work in process inventory, they normally have one general ledger account that has a subsidiary ledger that contains individual job cost sheets. So you've got, this is a hard color to erase, so I'm going to use a little bit lighter. So you've got whatever the general ledger account is that you're using, and then within that account you have different like subsidiary accounts that contain the individual jobs. So you've got your main account, I'm going to put like carpet cleaning. And then, so this is your main account that shows up on your financials. And then within that, you might have carpet cleaning for Joe and Sam and whoever. And so these are the actual jobs, but we've broken them down. So they're all carpet cleaning jobs, but when we're reporting them and we're tracking them based on the individual job. So, for Joe, we had, we made $2,000 cleaning his huge house. And then for Sam, we made $100 cleaning his smaller house. But this way we can track each individual job, the main account and then subsidiary accounts within. So if we just want to look at the main account would have, that amount in it, and then when we broke it down and looked within the account, we would have actually, these broken out.
Okay.
For record keeping, for job order costing systems, they normally use a job cost sheet for each job, and we saw an example of that in the last class as well. But they can all look different, but basically it's like a sheet of paper, or it could be a document, it could be an Excel file. These days, a lot of times, it's kind of a mixture of both. So you've got the sheet that's provided from the employee. So if we're sticking with carpet cleaning company, whoever went out and cleaned the carpets while they were there or when they were done, they made notes on a sheet, probably provided to them by their employer, that they cleaned these rooms, that was this many square feet, they used these products, based on the price of the product and all of that kind of thing, they came up with how much money was actually used to perform the work. And that's normally done in the accounting department. But they have this sheet here that tells everything that they did at the job. And then that sheet is then turned into the accounting department or whoever does their record keeping. And then they go in and they input that information in their system or Excel or both to kind of help keep track of all that. And then the timing of cost transfers, this is when each job is completed. So the timing of completion. For a process costing system, the company type manufactures homogeneous products through a series of uniform steps or processes. So again, you know, think of like an assembly line or something like that where, you know, when we can go to that tablet example. We're creating tablets. They all are the same. Cost accumulation is by the process. In our work in process inventory, we have a separate work in process inventory account for each process or department. So we have a department that is, you know, assembling everything, putting everything together. We have a department that is, you know, it can even, you know, be broken down to, we have a department that just installs the keyboard or just installs the screen. That specificity, how specific you want your process to be broken down is determined by the company. So, you know, some companies may just want it to be more narrow, and you may just have process of getting all the products together, process of putting them together, process of getting them ready to ship. Or you may have a company that wants everything just, you know, as detailed as possible and broken down. So that's where you might have a company that tracks everything based on, well, the keyboard's installed. Well, now we have the screen installed. So just that part depends on the company as to how specific they want everything to be tracked. And then for record keeping, it kind of falls into that as well. But for process costing record keeping, the production cost report for each process or department is what is used to track their records. So they have a production cost report for each process or department. And then the timing of cost transfers, the cost is transferred at the end of the accounting period. And so when you think about it, there are some similarities, but there are also differences. So just make sure that you kind of know the difference between the two. If you do have any questions that relate to job order costing and process costing, which you will because that's what this chapter is about, this slide could kind of help you differentiate between the two. So companies use process costing to determine the per unit cost in order to control cost, set their selling prices, and calculate account balances. And some of those account balances that are being calculated are the work in process inventory account, our finished goods inventory, and our cost of goods sold. Here is a diagram. This is, so we had a diagram similar to this last class. And you'll see here we've got our different jobs on here. So we've got job 27, 28, and 29. And this is just showing us the comparison of the flow of cost. So we have here in our panel A, the job order costing. And in panel B, we're looking at process costing. And with job order costing, first, the costs are going to flow through, with both, they're going to flow through our balance sheet and then to our income statement once they're sold. But prior to being sold, they're going to sit in our balance sheet. And they're going to sit two different ways. So if it's a job order costing system, we're tracking everything by the job. And so when we start the job, we've started job 27, and it's sitting in our work in process inventory. We're currently working on it. And then once we've completed job 27, we're moving it to our finished goods inventory account. And then once it's ready for sale and we've sold it, it's going to move into our cost of goods sold account on our income statement. For process costing, work in process, we're working on it. It's going to show on our balance sheet, and you see here, instead of it saying a job name, we are saying what we're doing. So when we're in the mixing process, so this is for, it says cheerful colors. I'm thinking it looked mixing, molding, and packaging. I'm thinking maybe like a Play-Doh or clay or something. I'm not really sure what the product is here. But we're mixing everything here, and it's in work in process. And then once we have mixed everything, we're then going to mold it. It's still in a work in process account because we're still working on the product. But we've broken it down into the mixing process, the molding process, and the packaging process. They're all in our work in process account, but we're instead of tracking them by job, we're tracking them by process. So we've mixed, we've molded, we've packaged. Now we're going to move it to our finished goods inventory account. And then once we sell the item, it's going on our income statement in the cost of goods sold account. We're going to calculate equivalent units of production for direct materials and conversion cost. So here we have, it says assignment of Department 1 cost at the end of the period. So our total cost that we incurred during the period equals whatever cost were transferred from Department 1 to Department 2 at the end of the period, and the remaining cost in Department 1 at the end of the period. So whatever we moved to Department 2 and whatever cost remained in Department 1 at the end of the period. We'll see. Equivalent units of production, EUP. So this measures the amount of materials added to or the work done on partially completed units during a period. And it's expressed in terms of fully complete units of output. So whatever is fully completed. For conversion costs, direct labor is a small part of manufacturing costs for highly automated manufacturers. So if it's highly automated, that means that a lot of what they do is automated, not manual, right? So again, you can think of an assembly line again, but instead of using workers, you may have machines that put things together. Like Coca-Cola. Have any of y'all visited Coca-Cola, the World of Coke? So, you know, when you're walking through, and it's been years since I've been there, I really want to go back because my favorite part is trying sodas at the end.
Yeah.
But I remember, like, when you walk through, there's somewhere where they have like this, you can kind of see like this assembly line looking thing. Yeah. And so it just makes you think, or when you watch, if you've seen any documentaries or anything like that about like how America was built or food and the food that built America and stuff like that, like they'll show you some examples, like you've got, you know, the can goes down and then the soda goes inside and the top goes on and then the labeling and all this, but it's all like automated. What they're saying here is direct labor. So direct labor is like me or you. And it's saying here the direct labor is a small part, if automation is high. Let's say that we don't have these conveyor belts and all these machines putting everything together. Well, then we're going to pay our people more money because it's going to take our people longer to work to put those items together. So that's why direct labor is normally less for highly automated, and it's higher for more manual manufacturers. It doesn't mean that it's better or worse.
Right.
You can have some people that can perform their job very quickly and efficiently, and the price of this machine to do it is so outrageously expensive that, you know, it works out better for you to pay your people to do it. Or it could be the other way around, where yes, the machine costs a lot of money, but over time you're going to have to pay it off, whatever. And maybe it costs less for you to use a machine instead of people. So it can go both ways.
You go to Krispy Donuts.
And you have the, I was about to say Kroger checkout, the self-checkout or whatever, but I think you're talking about the same thing.
Yeah.
Yeah, so you have a couple of self-checkout places where, or even like McDonald's, you can like place your order when you walk in, and then, well, now you do it on the app. But
little app
Machine.
yeah, you've got the machine inside. I don't know if there's helper or not, but I know I use the app whenever I can, because I like to pull up at the drive-through line and say my name and go, instead of having to like sit there for 10 minutes and tell them what all I want, because I have a big family, so it takes us a minute to order. Plus I feel special. I'm like, heck yeah, I just pulled up and I'm gone.
I don't know if they're the first restaurant to do it, but go any state in the world. You go to Chick-fil-A, you notice their time and management, just their management system. I have two drive-throughs for you, and every worker is out there. Not every worker is with a tablet, but every worker is they'll take care of you.
Yeah.
Like, no car is gonna skip you, or if they do, they bring their food. They bring their food to them, and then they bring your food to you, or you get your food at the window. But it's never like unfair. Like they're very fair in their management style. That's why I always found that interesting. I was like, okay, and then all these other places started doing this as a competitive market. So all these other places started doing, like, wow,
Yeah,
this is really making a difference.
yeah, it is. And you're right. And Chick-fil-A, I think part of the reason why they're so quick when it comes to this kind of thing is because they really only do chicken. And if they offer these other items, it could slow them down a little bit. So direct labor is a small part of manufacturing cost. For highly automated manufacturers, it's normally a little bit more when you get more manual. And to simplify accounting, your direct labor is combined with manufacturing overhead, which is called your conversion cost. And your conversion costs are the cost to convert your raw materials into your finished goods. So whatever it costs you to turn all of this wood and nails, this pile of wood and nails, into a table that you can sell, is your cost of conversion. We're going to prepare a production cost report using the weighted average method. So how is a production cost report prepared? We see here, this is showing us the flow of cost in producing puzzles. So in this example, we are creating a puzzle. So we've got the assembly process, which is where we start. And in the assembly process, we're going to have our direct materials, direct labor, and manufacturing overhead accounts. We're going to put all of the cardboard that we need to create the puzzle, the pictures, and the glue. Those are all direct materials to creating this puzzle. The people who are putting those items together, those are our workers who are operating the machines. That's our direct labor. And then our manufacturing overhead is if there happens to be any maintenance or depreciation on our machines. So a machine breaks down, we have to fix it. That's going to go in our manufacturing overhead account. Once we have partially completed the puzzles, they are then going to move over to the cutting process. They're still not finished and ready for sale yet, so they're still going to be in our direct materials, direct labor, and manufacturing overhead accounts because we haven't completed them. So now our direct materials, we have a box, and the labor is the workers who are, operating the cutting machines. Our manufacturing overhead, same, it's the maintenance and depreciation, but now we're looking at cutting machines because we're in the cutting process. And then once the puzzles are completed, they are no longer in that assembly or cutting process. They are now completed and ready for sale. So production cost report shows the calculations for the physical flows and the cost of flows of the products. It summarizes the flow of physical units. It computes the output in terms of equivalent units of production. It computes the cost per equivalent unit of production and assign cost to units that are completed and units that are also in process. Two unique terms are used on our production cost report. So the two terms that we use on our production cost report are to account for and accounted for. Does anyone know what to account for is? Or you can tell me what you think accounted for is. So we have to account for, accounted for. I'm going to explain it to you a little bit easier than this. So basically, to account for is anything at the beginning. What we are accounting for. We have not yet accounted for it. So we have to account for. And then this one is what we have accounted for. So to account for includes the amount in process at the beginning of the period plus the amount started or added during the period. So to account for anything at the very beginning. So we started with 100 and then we added 50 during the period. So 150 to account for. To account for would be, we started with, so to account for includes the amount in process at the beginning of the period. So at the beginning of the period, we had 100. And then during the period, we added 50. So we have 150 to account for. Accounted for shows what happened to the amounts to account for. They are either still in process or completed and transferred out. So we have 150. Oh my gosh, that's horrible. 150, that's what that is. That's a 5. We have 150 to account for. And then accounted for shows what happened to those amounts. 150. Are they still in process or have we completed and transferred those out? So if we completed and transferred some out, we would take that out of the 150. We have an example. Okay, let's see. Yep. So here, production cost report, units to account for, and units accounted for. So I would say refer back to this slide just because it kind of, it's, again, and I think I've mentioned this before, but when you look at these, I know a lot of times people just kind of skip through these examples, but if you really look at it and read it to see what's going on, it really does help some people with better understanding what is going on. Here we're looking at units to account for. They're telling us that in the beginning we had 0, and then in production we had 50,000. So the total number to account for is 50,000. So if you had a question that said, what are the total units to account for? How would you solve that? You would add. So you would take whatever your beginning work in process is plus your started in production, and that's going to give you your total units to account for. And we know that because 0 plus 50,000 equals 50,000. So down here in this one, units accounted for, we have completed and transferred out of 40,000, our ending work in process of 10,000, and they're telling us that the total units that we have accounted for is 50,000. So if we had a question that said, what's the total units accounted for, how would we solve that?
We would add the completed transferred out to the ending working process.
Exactly. Perfect. Yep. So just kind of looking at this to see what's going on or seeing what's going on in the numbers can help you to figure out how they calculated that. And you will see some questions similar to these. This is slide 17. So now what we're going to do is, so in units accounted for, we have completed and transferred out, and we have our ending work in process account. So when looking at anything that was transferred in, they did not say we had anything transferred in, so we're putting NA here in our equivalent units. But then for direct materials, we have 40,000 and we have 10,000 work in process. So the 40,000 and the 10,000 are going to show in our direct materials. And then the conversion cost, which is the cost to convert the product, we're going to show in our completed and transferred out 40,000 and our ending work in process 2,500 in this example. And then that's going to tell it, that's going to give us the total units accounted for of 42,500. And then here we've added some items. So in step 3, we're looking at the cost to account for. And so we see here we've got our transferred in, which was all were NAs because we didn't have anything transferred in. We've got our direct materials, our conversion cost, and then the total cost. So for example, if you have a question that says, what's the cost per equivalent unit for your direct materials, how would you solve that? Might take a second to, that is kind of small, isn't it? So if you had a question that said, what's the cost per equivalent unit for your direct materials? How would you solve that? You would, there's a couple of different ways. So I'm just going to kind of like tell you. I want you to look at it though and think about it. But to find the cost per equivalent unit, you could be given the total cost to account for, and then you divide that by your total EUP, or you know, you could have your cost added during the period, and they could give you your beginning work in process. And if they gave you those two items, you would have to first add those to get your total cost to account for. So definitely refer back to the slides, or you know, you can also write these out. but they can kind of help you with, solving things. It's a quick reference to kind of look back, because you could be supplied with these two items and this one. And so you could have 3 items and they're asking you, what's the cost per equivalent unit? Well, first you have to add these together and then divide them. So just kind of keep that in mind. Or they could just give you the total cost to account for and the total EUP. And if that's the case, you just take the total cost to account for divided by your total EUP, and it gives you your cost per equivalent unit. So just having these slides to refer back to can really help. And you solve the conversion cost the same way. And then your total cost, you're just going to add all of that together, add your direct materials cost equivalent and your conversion cost equivalent, and that's going to give you what your total cost equivalent is. So if you have a question that says, what's the total cost equivalent? You add direct materials plus conversion cost equals total cost.
This is all starting from the top. So we're here at the units, and the bottom is the cost.
Yes, sir. Slide 19.
Okay, you added. So I see. Okay, so you added the top part. The bottom portion is the total units accounted for.
And write it down if you need to, because you will see questions like this. So to find the total cost to account for, take the beginning work in process plus the cost added during the period equals total cost to account for. To find the cost per equivalent unit, you're going to take the total cost to account for divided by your total EUP equals your cost per equivalent unit. And that can be broken down into direct materials. It can be broken down into conversion cost. Your cost per equivalent unit, to find the total cost per equivalent unit, you are going to add whatever the cost is per equivalent unit of direct materials plus whatever the cost per equivalent unit is for your conversion cost equals your total cost per equivalent unit. That's a plus. And then so then for step 4, it's telling us, it's saying the cost accounted for. So now we're in cost accounted for. So this was cost to account for, and now we're looking at costs that we have accounted for. So in accounted for, this is where we're going to see our completed and transferred out. It's been completed and transferred out. We have our ending work in process account. So what we're going to do is for direct materials, they're telling us we completed and transferred out 112,000, and in our ending work in process 28,000. So to get the total cost accounted for in direct materials, we add those. We're going to add completed and transferred out plus ending work in process equals the total cost accounted for. To get the conversion cost accounted for, we're going to take, again, same thing, completed and transferred out plus ending work in process gives us our total cost accounted for our conversion cost. And to get the total cost, we're going to add our direct materials total cost accounted for plus our conversion cost total cost accounted for, which equals our total cost accounted for. The cost of materials from the assembly department are transferred into the cutting department. The transferred costs are called transferred in cost. The weighted average method combines the average cost of equivalent units of production by combining the beginning inventory cost with current period cost. So here we're looking at a production cost report. We have our units to account for and our units accounted for. Units to account for, we have beginning work in process of 5,000. We transferred in 40,000. So our total units to account for, we're adding those together, gives us 45,000. Our units accounted for, we've completed and transferred out, 38,000. Our ending work in process is 7,000. So our total units accounted for is 45,000. And then here for our second step, the EUP, we're going to, again, so we actually have some that were transferred in this example. So we see here units to account for, we had a transferred in of 40,000. So when we're accounting for units accounted for, we had 38,000 transferred in, and our ending work in process was 7,000. We add those together to get the total units accounted for transferred in. And then the total units accounted for direct materials, we add those together. Conversion cost for total units accounted for, we're going to add those together as well to get your conversion cost, just like we did in the last example. So the only difference here is we have some items that are transferred in. They're going to show up down here in accounted for, and we're going to add those to get the total units accounted for transferred in. Cost to account for, so we have our beginning balance work in process inventory of 22,000 transferred in. From the assembly department during July, we had 176,000 transferred in. So to get that total, you add those. For all of these, so you're going to add whatever items you have to get the total for that particular account. So in transferred in, we've added all of these to get 198,000. Direct materials you would add, conversion costs you would add to get your totals. In this example, we're looking at cost to account for, step 3. So we have here, we've transferred in 22,000, which is in our beginning work in process. Our cost added during the period as 176,000 gives us our total cost to account for of 198,000. And then we're going to divide that by our total EUP of 45,000, and that's going to tell us that our equivalent units, our cost per equivalent unit is $4.40. And it's the same process for direct materials. It's the same process for conversion cost. And then our step 4, our cost accounted for, we have completed and transferred out plus our ending work in process equals the cost, the total cost accounted for. Completed and transferred out plus ending work in process equals total cost accounted for. And that's for all 3 items. So if you're looking at transferred in, direct materials, or conversion costs, we're adding completed and transferred out plus ending work in process equals total cost accounted for. And then to get the total cost overall, you're going to add those together. So you'll add your transferred in plus your direct materials plus your conversion cost accounted for, and that's going to give you the total cost accounted for all departments combined. So prepare journal entries for a process costing system. So costs flow through the process costing system in 4 different steps. The 4 A's. We accumulate cost, we assign cost, we allocate cost, and we adjust cost. Does anyone know, or can anyone give me an example of accumulating cost? Or any of these, actually. You can pick any of these. How do you accumulate cost? What does assign cost mean? Allocate cost, adjust cost.
Assigning cost is like putting puzzling like that cost with the particular transaction or product, but yeah, like assigning that cost to that product, and then I think accumulating cost would be
So assigning cost, like assigning what the cost is for the product. Like going back to Chick-fil-A, well, our chicken sandwich is going to cost this amount of money. And then, well, I'm not going to type all that in there, but some of these, okay, so assign cost is when you say, okay, this is the price of the Chick-fil-A sandwich. Accumulate cost. Accumulate cost is you are accumulating the cost of the item. Allocate cost, you're allocating the cost to the different items. So you could think of, like, when you allocate cost, you could think of you buy a bunch of chicken, but now you bought this huge amount of chicken. Some of it's going to be a chicken sandwich, some of it's going to be chicken nuggets. So you bought chicken, but now you have to allocate the cost of the chicken based on what you turned it into. So we paid $100 for chicken, but we got 50 in our chicken sandwiches and 30 in our nuggets and then 20 in our chicken strips. So that's allocate. And then adjust. Adjust is like at the very end when we're truing it up, where we've gotten what the actual numbers are, and now we are adjusting.
so that's like the final step.
Yep.
Okay.
Mm-hmm. And then cost flow from one work in process inventory account to the next, and eventually to finished goods inventory and cost of goods sold. So it flows from one inventory account to the next. We kind of saw this in some previous examples where we had this work in process inventory account. I think we had like mixing, and then it moved to molding, and then it moved. So you have multiple work in process inventory accounts that cost can flow through until they eventually end up in the finished goods inventory account, and then they move to cost of goods sold. So we've got a couple of examples here. Transaction 1, raw materials purchased. During July, the company purchased materials on account for $175,000. So to record the journal entry for this purchase, we purchased materials on account. On account means we have not yet paid for them. We didn't pay cash. So we're going to debit our raw materials inventory account, and we're going to credit our accounts payable account. And we're going to put a note in there so that whoever looks at this tomorrow, 5 years from now, whatever, knows what was going on with this entry. So we purchased materials and accumulated that in RM, raw materials account. So we purchased materials, accumulated in raw materials. And these notes can change. So, you know, it's not necessarily going to, someone else might word this differently. So just kind of note that as well. So if you happen to have a journal entry that you need to prepare, you know, don't worry about the note needs to be right, but it's not like word for word. It doesn't have to be word for word what the answer is, as long as it is telling the same story, what happened. So during July, in transaction 2, we have raw materials used in production. During July, direct materials were assigned to 2 production departments, $140,000 to the assembly department and $19,000 to the cutting department. $2,000 in indirect materials were accumulated in our manufacturing overhead. So for this one, we're actually going to debit 3 different accounts. So we've got our work in process inventory account for assembly. It says here we had $140,000 to the assembly department. So we're going to debit $140,000 in our work in process assembly, $19,000 to the cutting department. So we're debiting work in process cutting for $19,000, and then we have indirect materials accumulated in our manufacturing overhead. So we're going to debit our manufacturing overhead account for that $2,000. All of this is going to hit our raw materials inventory account. So we're going to credit our raw materials inventory account for $161,000. And our note is we have materials that were used, direct materials assigned to work in process, indirect materials accumulated in our manufacturing overhead account. And we know that because it says here accumulated in manufacturing overhead. Assigned to work in process. Because it's direct materials that were assigned to 2 production departments, and we are assembling. So we know that they are in process because we're putting them together. So that's just kind of like keywords to see, to kind of help you with figuring out what accounts you're going to be using. Transaction 3, during the month, Puzzle Me incurred $20,000 in direct labor cost in the assembly department, $3,840 in direct labor cost in the cutting department, and $1,500 in indirect labor cost accumulated in manufacturing overhead. So again, we're debiting our work in process inventory assembly, work in process inventory cutting, and our manufacturing overhead account. And this time we're talking about labor. We're talking about direct labor. We're talking about indirect labor. But we're talking about labor. So we are going to credit our wages payable account. So all of these are labor amounts. We're going to add those up and we're going to credit our wages payable account by that full amount. And then for our note, labor incurred, direct labor assigned to work in process, indirect labor accumulated in manufacturing overhead. And it says all of that up here. In addition to the indirect materials and indirect labor costs, Puzzle Me incurred $35,000 in machine depreciation and $20,000 in indirect costs that were paid in cash, which included rent and utilities. So in this example, we have 2 different journal entries. We're going to debit our manufacturing overhead for our depreciation of $35,000. We're going to credit our accumulated depreciation account for the same amount, and we're just going to make a note that we had overhead incurred and cost accumulated in manufacturing overhead. And for the second portion, we paid cash for indirect cost, so we're going to debit our manufacturing overhead account of $20,000 and we're going to credit our cash account of $20,000. And we're going to make a note that overhead incurred, cost accumulated in manufacturing overhead. Puzzle Me used a predetermined overhead allocation rate to allocate indirect costs to the departments. We have $48,000 to the assembly department and $11,000 to the cutting department. So in this example, we have our work in process inventory. Assembly, we're debiting $48,000. Our cutting, we're going to debit $11,000. And we're going to credit our manufacturing overhead account for the full amount. And our note is overhead allocated to work in process. At the end of July, when the production cost report for the assembly department was prepared, Puzzle Me assigned $176,000 to the 40,000 units that were transferred from the assembly department to the cutting department. We're going to debit our work in process inventory cutting for $176,000, credit our work in process inventory assembly for $176,000, and our transfer cost assigned to units transferred. This is our note. So notice here we didn't have to record this 40 units. That's just additional information letting us know where this came from. But we are debiting, it says we're debiting the 176,000 units here. In cutting, moving it from cutting to assembly, taking it out of here and putting it here. You could add that to the notes if you wanted to, but just wanted you to kind of see. There will be some questions where you might, I don't want this to throw you off. So if you had a question about this particular scenario, I don't want you to sit there and wonder what are you supposed to do with the 40,000 units. So just kind of pointing that out. Now there could be a question where you need it, but I just want you to kind of like go through that thought process, because in this case we did not need that for this journal entry. At the end of July, when the production cost report for the cutting department was prepared, Puzzle Me assigned $201,400 to the 38,000 units that were transferred from the cutting department to finished goods inventory. This is the cost of goods manufactured. So we're going to debit our finished goods inventory account, and we're going to credit our work in process inventory account for cutting. So they are moving it to finished goods, taking it out of the cutting, and we have units completed, and our costs are now assigned to our finished goods account. During July, Puzzle Me sold 35,000 puzzles. We have already determined from the production cost report for the cutting department that the cost of goods manufactured is $5.30 per puzzle. Therefore, the cost of 35,000 puzzles is $185,500. And they're telling us, definitely kind of come back to this slide 36. So they're telling us here that 35,000 puzzles times $5.30 per puzzle gives us the total cost for the puzzles, which is $185,500. This is how they calculated it. And then the puzzles were sold on account for $8 each. So we sold them for $8. So $8 times 35,000 puzzles gives us $280,000. See that here, how they calculated it. So that's how we determined the total amount of sold and the total amount of cost. You will see that. And then if you wanted to take it a step further to figure out what you actually made, you would take the total amount sold, which is $280,000, minus the total cost of $185,500, and that would give you what you made your earnings. If it said what is the total earnings per item, we know that the cost per item is $5.30. We know that we're selling them for $8 a piece. So if we were trying to figure out how much money we were going to make per item, we would take the $8 minus $5.30. And that would give us our price per item, our profit per item. So in this example, we are going to show what we sold. So we have here, we've got our accounts receivable, where we have not received the money yet, so we have an accounts receivable. The accounts receivable is for the full sales amount. So that's what we sold them for. $8, 8 times 300, 8 times 35,000 gives us 280,000. So this is what we expect to receive for the items. So we have a debit to accounts receivable of 280,000, and that's what our revenue is going to be, because that's what we sold them for, our sales price. So our sales revenue, we're going to credit for 280,000. This is to record the sales. And then when we look at our cost of our to record the sale, like the cost portion, because you have to record that as well. For the cost portion, we're going to debit our cost of goods sold, but we're not going to debit it for 280,000. We're only going to debit it for the cost of the products that were sold. So we're going to debit our cost of goods sold for $185,500. We're going to credit our finished goods inventory account for the same, because that's what it cost us to finish those goods to then sell those products. So the cost is what we will record for our cost of goods sold and our finished goods inventory. The revenue portion, the sales price, is what we will use for our accounts receivable and our sales revenue. The actual manufacturing overhead costs incurred were $58,500, which includes the indirect materials in transaction 2, the indirect labor in transaction 3, and the accumulated depreciation and other indirect costs in transaction 4. The amount of manufacturing overhead allocated in the two departments was $59,000. So they are showing here there's a difference of 500. We see 58,500 and 59,000. That difference, we're going to debit our manufacturing overhead account, and we're crediting our cost of goods sold for the difference of over-allocated overhead. And just to kind of give you a little refresher, so you have under-allocated and you have over-allocated. And so at the beginning of the period, we will allocate cost based on what we think. Maybe it's based on prior periods. But we'll go ahead and we'll allocate those costs for pricing purposes, or whatever purposes we need. But we'll allocate those costs. So let's say we're looking at the beginning of April, we figure our power bill, which always changes, let's say it's our utilities. So we figure our utilities are going to be $1,000 at the beginning of April. So we're going to allocate a portion of $1,000 to each item, or however we decide that we're going to distribute that overhead. And then at the end of April, we find out, well, it was actually only $800. So we have over allocated, because we allocated $1,000 at the beginning of the period, and now at the end of the period, it's only at $800. So we over allocated $1,000. We over allocated by $200. Or it could be swapped. Maybe we allocated $1,000 at the beginning of the period, but it was $1,500 at the end. So we've under allocated. Now we have to true that up and add in that additional $500 to allocate out. So that's what they're doing here. They're saying that they over allocated by $500, so they're fixing that in this journal entry here. Use a production cost report to make decisions. So how can the production cost report be used to make decisions? The production cost report can be used to help control costs, evaluate performance, price our products, identify the most profitable products, and it can also be used to help us prepare our financial statements. We're going to prepare a production cost report using our first in, first out FIFO method. So how is a production cost report prepared using FIFO? We have our equivalent units of production cost methods, and within those methods, we have our weighted average method and our first in, first out. The first in, first out method determines the cost of equivalent units by accounting for beginning inventory separately. How is a production cost report prepared? Using our FIFO method. So here we're looking at July's units accounted for, and when we started in July, we had 40,000 units. We completed 33,000 units that we had started in July. So we see here, we started in July and completed 33,000 units. At the beginning of July, we had 5,000 units. So we already had 5,000 at the beginning. We started and completed 33,000 units. So in July, the total number of units that we completed was 38,000. So don't let that confuse you. If you get a question that says the beginning inventory was 5,000, we started and completed 33,000 units. How much was, and then our ending inventory was 7,000 units. And how much was completed in July? Our completed in July is going to be that beginning inventory of 5,000 plus the completed and started of 33,000, which gives us 38,000. If you have a question that says what was the total units accounted for, the total units accounted for, you're going to also include your ending inventory. So that's going to give you 45,000 as total units accounted for. And then here we're looking at our production cost report for the cutting department. The end of July, we have our units to account for, our units accounted for, and we've already gone through this with the previous departments. We're not going to go through all of this again, but it's done the same exact way. So first we have our physical flow of units. We're looking at units to account for. We've got our beginning work in process plus our started in production gives us the total units to account for. Units accounted for gives us, to find the units accounted for, take your beginning work in process plus started and completed equals transferred to finished goods. You're going to add in your ending work in process to give you the total units accounted for. So here we see our beginning inventory. In June, we had 60%, in our beginning inventory account, 60% of our inventory was from June. 40% of our inventory was from July. We started and completed all of July, and we were left with an ending inventory of 30%. So in August, we're going to start with 70% because we were left with 30%. So in August, we're going to start with 70% converted. So we have here to see this. Step 2, we've got our, I'm not going to go through these in detail, but I am going to kind of just read through a little bit. So in step 2, units accounted for, we have, again, like the other example, transferred in, direct materials, conversion cost, and you solve those the same way. So you're going to take beginning work in process plus started and completed, gives you the transferred to finished goods. And then you're going to add in your ending work in process, which gives you your total units accounted for. And this is same, so we're just showing here cost to account for. We've got our transferred in, our direct materials, our conversion cost, and then we add all of those together to get the total. Same thing, so then for step 3, our cost to account for, we are going to take the cost added during the current period, divide that by our EUP for this period, and that's going to give us our cost per equivalent unit this period. And you'll have one for transferred in. If you have transferred in items, you'll have one for direct materials, and you'll have one for conversion cost. And then for this one, you've got step 4, cost accounted for, and we've got our total cost listed here. So we have completed all of this. We added the transferred in plus the direct materials plus the conversion cost. That's going to give us our total cost. And then to find the cost per unit, if you look down here for A, for our beginning work in process account, we're going to take this 26,000, which is the total cost for beginning work in process, divide that by 5,000 units, and that's going to give us $5.20 per unit. To find the started and completed cost per unit, you're going to take the 174,900, which is located in our started and completed, divide that by 33,000 units, and that's going to give us $5.30 per unit.